Welcome back to the Japan FinTech Observer. Get ready for a quick hit of the latest news in Japanese finance and fintech. We're diving into the headlines, breaking down the trends, and leaving you with the insights you need to stay ahead of the curve. Let's go!
The Financial Services Agency has recently submitted its key requests for tax system reforms for the fiscal year 2025, focusing on promoting investment, improving social security, and facilitating a stable national life. What caught the headlines in the crypto world is this single bullet point in the 15-page deck, namely, the tax treatment of cryptocurrency trading needs further consideration, focusing on whether cryptocurrencies should be treated as investable financial assets. Currently, digital assets are treated as other income, which limits loss offsets and taxes gains at the taxpayer's marginal income tax rate. Treatment as an investable financial asset would put digital assets on par with securities. Apart from that, let's cover the sections one by one. First, for realizing the Asset Income Doubling Plan and Asset Management Nation, the FSA emphasizes promoting asset growth and investment among Japanese citizens. Key proposals include 1. Enhancing NISA. The FSA calls for simplifying NISA procedures, allowing for same-day asset purchases when switching financial institutions, and expanding the eligible investment options to include actively managed ETFs. 2. Pension reforms. The FSA supports the revisions to corporate and individual pension plans outlined in government policy, urging for necessary tax measures to ensure these reforms effectively contribute to household asset formation. 3. Tax treatment of listed shares. The FSA proposes making it easier to use listed shares for payment in kind of inheritance tax and reviewing the valuation method for these shares to address preemptive selling driven by stock price volatility. 4. Integrating financial income taxation. The FSA advocates for expanding the scope of loss offsetting to include derivative transactions and savings accounts, encouraging investment diversification. Second, for strengthening Japan as an international financial hub, the FSA emphasizes the need to attract cross-border investment and promote efficiency in this area. Key proposals include 1. Streamlining tax treaty procedures. The FSA calls for simplifying tax treaty application processes for investments made through funds, ensuring that treaty benefits are easily accessible. 2. Digitalization of tax treaty procedures. The FSA proposes digitizing and streamlining tax treaty-related procedures for specific financial institutions to reduce administrative burdens. Third, for securing a stable national life, the FSA highlights the importance of strengthening social safety nets and supporting families. Key proposals include 1. Expanding life insurance premium deductions. The FSA calls for implementing the measures outlined in the FY2024 tax system revision outline, particularly the increase in the general deduction limit for new life insurance premiums related to survivor benefits for households with dependents under 23 years old. 2. Enhancing catastrophe reserve system. The FSA proposes extending the increased tax-free accumulation rate for fire insurance and other relevant categories, unifying the withdrawal unit across all categories, raising the withdrawal trigger rate, and increasing the tax-free accumulation rate for fire and wind flood damage. In summary, these proposals reflect the FSA's commitment to promoting a healthy financial ecosystem, encouraging investment, supporting families, and fostering a secure national life. The specific details of these measures will be further discussed during budget deliberations.